So Sharding Capital is more investing into the early stage project. We try to invest and find the opportunity that can make 10 to 100x. And we tend to support the founders from day one and write the earliest check size possible. Our strongest suit will be mostly in marketing and go-to-market strategy. And yeah, these days we look at quite a lot of early stage and emerging opportunities, including meme coins. And next, let's put the spotlight on our other panelists. So we have Vanessa from Arche Capital and Chris from Franklin Templeton. So would you like to take turns to introduce yourself?
Sure. Hello. Hi, my name is Vanessa Grellet. I'm the managing partner and founder of Arche Capital, an early stage VC fund that invests in infrastructure and financial services. I serve on the board of the Enterprise Ethereum Alliance that fosters the dialogue between enterprise and public blockchains in the EVM world.
Awesome. Thank you, Vanessa.
Hi there. My name is Christopher Jensen with Franklin Templeton. It's a pleasure to be here at the Global Blockchain Show and back in Dubai. Franklin Templeton is a large global asset manager, 1.6 trillion under management. We've been around for a little over 75 years. And digital assets is an asset class that's extremely important to our firm. We have a dedicated group of about 60 individuals. And building out an entire investment suite in digital assets, really recognizing this as a new asset class. And so we're one of the ETF providers in the United States. We also have a blockchain venture team, as well as invest in tokens. I head up the digital asset research there. And in addition to the investment side, we're also builders in the space. So we're customers of blockchains, we're users of blockchains. I'd like to think even though we're a big institution. We're very crypto native, and our analyst team is extremely crypto native. And so when people ask me how we do what we do, it's very similar to traditional asset classes. It's doing a lot of data analysis and doing diligence calls, and just in digital assets that it's the same two things. Everything's just nuanced, right? But it's been a really fun opportunity. We got started as a firm in 2018. I'm really excited about the prospects going forward.
Thank you, Chris. Yeah, I have a lot of specific questions later to ask Chris as well from like a more of a institutional perspective. Let's start with some general questions about the topic today. So, how do we view the power of Web3, and how do we see it is contributing to a decentralized future? So, I'd love to get your take, for example, Chris.
Yeah, sure. I think it's incredibly powerful and important, right? So when we talk about Web3, I like to think of that mental model from Chris Dixon. Read, write, own. We like to describe it as this new opportunity as being the protocol economy. And unlike in Web2, where there's a bunch of platforms, dominating various marketplaces, and to get exposure, you invest in the platform, then has exposure into the end market or the use case. With Web3, through tokens, token holders directly own the network and the ecosystem that they're creating. And to us, that is the power of Web3. The ability to own and share in the value created. That presumes, that the protocol, the network, the ecosystem is generating value, and that through that tokenomic design, there's a way for that value to get back to the token. If those two things are true, then yes, we believe by owning the tokens, you're owning a part of the network, and that really is the power of Web3.
Yeah, totally agree. So giving power back to individuals and also eliminate all the potential like centralized parties. Vanessa, what's your take on this?
Well, we're looking at a totally different way of operating. These are open source models. Open source has existed for decades, and open source won in the Web2 world, and open source wins in the Web3 world. What's interesting here is that you have a way to monetize and represent that ownership through the token. and participation and ownership is redefined through these decentralized projects. So contributing your time, contributing your talent, contributing your capital is the source of the rewards, unlike Web2 models where the rewards only go to one entity that drives the activity, whereas here your individual contribution drives back the value directly to you and the token holder.
Totally agree. So it's more like basically empower the users with more ownership, control, as well as the ability to monetize the asset they have, and thus contributing to a fairer and more robust, actually, distribution system. So since we are all in Web3 and we have been like trying to contribute as much as possible for the mass to adopt Web3, I want to ask what kind of setbacks or roadblocks you think is still like preventing us to see more mass or worldwide adoption for the Web3 products and space? Maybe, yeah, Chris, feel free to take a jab.
Sure. A couple things that come to mind. One is, and this comes up a lot, obviously, is regulatory uncertainty can certainly be a roadblock. It has been in the past. We are more optimistic and constructive looking forward that will be less of a roadblock, in the United States where I'm from and globally. So, I think we're very encouraged by what we're seeing there. And then also that, a lot of times, people are asking, what's the killer app? What are those use cases? Where's crypto's ChatGPT moment where the light bulb goes off and you're like, oh, I get it. I think Bitcoin was the original, killer app and use case. Stable coins often get talked about, and I think that's absolutely a 0 to 1 moment to be able to send $1 anywhere in the world in under a second for under a penny. But people are like, okay, those are great, but what's next, and what end market or sector is it going to come from? And so I think that sometimes that holds it back. But I think whether it comes from something like DePIN, which we're really excited about, or it comes as the next evolution of the payments, which we're kind of already seeing, or it's with respect to AI agents, which I know is a topic we'll get to. I think there's a few different areas where it could happen, and it might happen in one of those end markets, and it might happen in all of those, plus ones we're not even thinking about right now.
Mm-hmm. Yeah. I was in Abu Dhabi FinTech Week yesterday, and I heard some speakers talking on stage, including Paxos, etc. And basically, I think a lot of things in crypto now, like for example, stablecoin, etc., they already have the product market fit. So I think the biggest probably roadblocks currently is like clear regulations. So because it's actually benefiting a lot of audience, especially in developing countries, and also like potential implementation of CBDC, etc. But it's just like you need a framework, you need a regulation to be ready for people to use this. Yeah. What other roadblocks do you have in mind, Vanessa?
Okay.
So I think the token economics frameworks work for infrastructure projects where the audience are developers, the incentives are focused on developing these systems that work for technical collaboration and for financial services. I don't think this works for the end consumer. So these types of incentives, it's very hard to have them long-term throughout the life cycle of a product that is consumer-facing. So I think that's a big issue. And I think that regarding the end consumer, we'll go back to probably the Web2 business models built on top of these open source models. The other issue is obviously the user experience. For some reason, the Web3 developers and projects and technical teams have not yet been able to deliver stellar user experience for people who want to use the apps. I think that's one due to the immaturity of the protocol layers and the infrastructure. And I hope this will be solved in the coming years with also the help of AI and its capabilities. And I think lastly, in the recent years, AI has taken over a lot of mind share of a lot of developers, a lot of investors, a lot of enterprise. So we'll see if the Web3 sort of decentralized value proposition will hold in the coming years.
Yeah. Also, I think, for example, Chris talked more from and Vanessa talked more from builder perspective. And then as a user, I would think about how do I onboard my mom, and then I'll be like, this the learning curve is just so steep. You know, she need to learn about wallets, self custody, and she need to learn about OTC, etc. So I feel like the education is very key, and maybe like some gamified or experience will be very helpful. And then also like the security concerns, like there's a lot of hacks and then a lot of scams. So I think all those parts are actually blocking Web3 getting more mass adoption. So that's actually opportunities for some of the builders who are in the audience seat. So try to see, you know, if there are some problems that you can solve, you know, amongst these challenges. And we as VCs, deployers, we are looking to deploy capital into founders who try to support and support more Web3 mass adoption, and also troubleshoot all this potential roadblocks and challenges on the way for this journey. Yeah. Let's move on to the next question, right? I have some questions for Chris because so Franklin Templeton has, I think, maybe 8 decades of operating experience, and I guess you guys more look into regulations. And I want to ask, right, ever since the Trump administration became effective, do you see more friendly policy towards crypto? And what are the notable changes, and what are the alphas here? Would you like to share some more about it?
Yeah, definitely. So we have been around a while, you know, and we're a very global firm. So you know, we have offices here in Dubai and elsewhere in the region. But our digital assets team is predominantly in the U.S. And so certainly that regulatory environment we're very close to. And as we look to, you know, not just invest in this space, but build products in this space, you know, we've been bumping up against, you know, just some of that resistance, or, you know, I think it's a consensus view that it would be better, right, if there were things were a little easier. But I think we're going to get that. I think there's a lot to be excited about, you know, specifically in the U.S. and globally. But with respect to U.S. regulation, you know, we certainly are certainly sensing a better attitude and receptivity to it. And I think, you know, when talking to my VC colleagues, you know, both our internal colleagues and other firms, you know, they really felt it from their portfolio companies, right? Kind of getting kind of squeezed or choked, right? So I think, you know, I invite you to kind of, you know, join in on the discussion. Would love to hear your insights on it. But I would say, you know, as an ETF issuer, as a product builder, and as a, you know, global asset manager, you know, it has been a little restrictive. But I think as we look forward with some of the changes and the kind of the promises being made to the industry, there's a lot to be, you know, encouraged and excited about.
Right. Do you think some of the, I would say, project or coins based out of the US, for example, Uniswap or ENS, they will face less stricter regulation concerns and have a relief rally in the upcoming cycle?
You want to go first?
So we've already seen the impact on the price of DeFi projects. Projects that have been in litigation for a long time with the SEC or threatened of litigation from the SEC. So, you know, historical coins like XRP, Uniswap have all, you know, had an interesting price action. I think DeFi will benefit from that relaxation. But I have to say, I'm a former securities lawyer, and yes, we anticipate that there will no longer be enforcement or unjust enforcement by the SEC to stretch the rules, but the rules still apply. It doesn't mean that securities laws don't apply, and until the securities laws change and the SEC regulations change, they do apply. And there is always the risk of litigation by a regulator, or maybe less by a regulator, or by some disgruntled investors. So I think the administration needs to move fast. It has already been giving a lot of, comfort. And we've seen also that the SEC has lost most of its cases in court. So the most important case for me, for the industry, and for the builders is the Tornado Cash indictment by the DOJ, because you had, technical founders who were terrorized of writing code just because, they were writing code and they were threatened to go to prison. So it was a really dire situation for the industry and for people who wanted to build in their countries.
I can add a comment to the Uniswap example. So heading up digital asset research, we're very focused on fundamentals, right? And so I think Uniswap's a great example. As we kind of dig into its KPIs and its actual financials, right? Without a fee switch, there is no value accrual back to the token.
Exactly.
But obviously it had and does have a very large market cap. And so when we model that out, we have to kind of assume that there's going to be a pathway there. Yet when something is announced, you see the spike, oftentimes a doubling, in token value, and it can happen overnight. But in our models, we were always kind of giving them credit or assuming a pathway for a clear token value accrual back to the token. So I think as protocols, as teams get more comfortable with explicit value accrual mechanisms in the tokenomic design of that protocol, I think it's great for them to have the clarity to put that in, because I think as more institutional investors coming into the space, that's what we're looking for, right? I don't want to just buy and hold a token for speculative reasons. I actually want to be able to underwrite the growth of a market and a use case, see that in the numbers, and actually have a way for that value to get back to the token. And without an explicit value accrual mechanism, I can't do that as easily.
Yeah, that's very insightful, and I believe it's very inspiring as well for some founders here who think about designing their tokenomics. Overall, I think DeFi is a very bullish vertical. It's coming back, and more institutions will be interested to, I would say, size well into this vertical. Now let's talk about meme coins. There's AI meme coins, and there's just overall meme coins. Just now, also Mara discussed about this topic. So I want to ask two of our panelists today. Do you think the meme coins is it contributing to the nature of Web3, which is decentralization, transparency, or it's kind of distracting serious builders from doing their work of mass Web3 adoption? So I'd love to hear your views. Maybe Vanessa, you start.
So I love meme coins. I think it's always interesting to see where innovation goes. It's fun. People trade. They make money. They lose money. They know what they're getting. Hopefully, they know what they're getting themselves into. What we've seen is institutions or market makers and more liquid funds step into the trading. So it's not really just a retail type of trade or activity. So people need to know that, because it's kind of getting to the place where the size is large enough for professional traders to come in. And so the question is, where do we go from here, right? I think a lot of people have benefited from the meme coin cycle. Will that hold until the end of this cycle? And I'm not going to give a time frame, but let's say the end of this bull cycle. And then what comes out of after that? Do we have more users of the blockchain? Do we have more people building after that? do we have diverted liquidity and assets that are going to that when there could go to other projects? I don't think we can be the judge of how people want to spend their money or speculate or invest. I think it's an interesting experience, like the NFT was an interesting experience. I don't know, I have to say, I don't know from the top of my head where it's going to go, but I like the fact that people can build these experiments without any barriers and without any limitation to access to the open source protocols. And I think, some valid business model or platforms will emerge from that.
Really?
Yeah, I agree with a lot of that. I think I can sum it up with, I think there's 4 very positive things they do. One, it's fun. It's a source of on-chain fun, and that is legitimate. 2, I think it helps with onboarding. I know personally lots of friends of all ages who have been onboarded to crypto because they wanted to have fun with meme coins, and they're not thinking that that's their investment account. They look at it as, hey, that's my play account, that's my fun account, and maybe I'll hold the Bitcoin ETF in my investable account, or maybe I'll do some work on what altcoins to buy. But the meme coins, that's for fun. It generates economic value for the underlying application or chain, so I like that. And then I think it's also stress testing these networks, which is also kind of valuable. Before we tokenize and put more and more real world assets on chain, it's good to know these chains can handle load, even if that load is just in the form of a meme coin. So I think people generally think of representing Franklin or being an employee of Franklin Templeton that I'm negatively biased towards meme coins, but I think we like them and and certainly see their use case and their value.
Right.
Yeah, I agree. Just now, Murai also mentioned some funds are deploying into meme coins. For us, in Fund 2, we're going to deploy a tranche to meme coins just because we really think it represents a very good culture, and then it also just really helps with the user onboarding. My sister bought Dogecoin. The first coin she bought is Dogecoin because she thinks it's cute. And I think we'll see many such cases. And then now also with the AI agent meme coins, so you basically see AI agent is something that in your daily life, in your work, etc. It's being used, and then AI agent meme coins is having you having the ownership of this certain AI agents. So it helps with the understanding, and it helps a lot with mass adoption. So I wonder is Arche Capital or Franklin Templeton thinking of deploying a small portion into meme coins potentially?
So specifically at Franklin, as I kind of alluded to, we definitely have a fundamental bias. But what I think what's interesting with meme coins is they can be used to bootstrap a community first, and then you can actually deploy, some kind of economic engine into that community. So it could start off looking like a total fun community coin with no value accrual, anything like that. But then later on down the road, once you have this captive market and this community, that set of users has certain needs, and you can actually kind of deliver products into that. And there are precedents for this. So I think those types of projects we're open-minded to. So I would describe it more as as long as there's that fundamental angle for us, whether it has a meme component or angle to it or not, we do lead with fundamentals, but that doesn't exclude meme coins outright.
Amazing, yeah.
So we have a pretty strict mandate for our fund. We invest in pre-seed and seed of infrastructure plays and companies who are going to issue tokens in the future. I actually had explicitly one investor ask me not to trade meme coins in the fund. And I told him not a problem because we're not a liquid fund. However, we have invested in a company called Nafta.ai that is a multi-AI agent workflow platform that powers some of the existing platforms and the AI meme coin industry. So it's interesting because we invested a few months ago without at all having in mind this explosion of AI meme coins. And so it's interesting to see that these meme coins also and this AI, decentralized AI infrastructure is needed and will mature with all the new projects coming in.
Yeah, I like that. Like we can build the culture first, and then later on you can just add. Once you have the users, you have the community, and you have like like everyone staying together. Then you can easily just try everything. Build a product, deploy utilities there, and then institutions will also have an easier time come in and then get convinced. Yeah, the last question for today. For us as like investors, especially in the more early stage ones, what are the most say compelling investment opportunities you notice for this cycle specifically? Yeah, Vanessa,
Sure.
feel free to start first.
So we invest throughout several cycles. We're long-term investors. We want to invest when the market goes up, when the market goes down. It doesn't matter. There's always innovation. I would even argue that founders have to be even more creative when the market is down and there is scarcity of money flowing in. We really love the intersection of open source and financial services. We think financial services is the product market fit for blockchain at this stage. And we do think that there's huge opportunities there. Combining it with AI and combining it with privacy technology like ZKs is really where we want to play. That being said, if you speak to another VC, they're going to argue that no, this is the time for decentralized applications and consumer applications. So what's interesting in this space is that you'll never have a consensus between investors on where investable projects are. It really depends on your time horizon, your risk appetite, and the risk reward.
And I can try to be quick. I would say 4 key themes that we're looking at. One is we've been big believers and supporters of the higher throughput chains and ecosystems, both on our venture side and in our liquid portfolios. So that's an area that we continue to be excited about. I would say, and I alluded to it earlier, but the deep end space, we love it. There's a lot of different end markets and applications there. So again, it's an area of interest on the venture side and the token side. I think we do have a tokenized real world asset, a money market fund on chain. We do think more are coming for the industry, right? So I think the blending of the traditional finance world and the on-chain world, whether that's putting ETF wrappers on more digitally native crypto products, or the opposite, taking traditional real-world products, putting those on-chain, excited about that as well.
Mm-hmm. Yeah, I think like consumer-facing applications is definitely very key, and then all the infrastructure that supports the ones that the public like meme coins, AI agents, all this infrastructure is very key. And just overall, the cycle rotates quite fast. And also I think this cycle is pretty left curve. So it's very important to just be amongst the right cabals and have a good exposure, so you develop a good intuition, so you know what kind of opportunity to look out for. Yeah. Thank you so much for listening. Yeah, thank you, our panelists, for sharing all this
Thank
alpha.
you, Belinda, Christopher, Vanessa. Although, please don't leave your seats just yet, because we have one question. The audience is listening very attentively, and there's one question that we don't have, unfortunately, too much time for for a lot of questions. I'm sure people would like to ask them, but we'll ask one. Okay?
Sure.
Thank you so much. So my name is Enver. I am a co-founder of a couple of GameFi projects on Ton blockchain, which is the blockchain of Telegram. And my question would be from 2 parts, if you don't mind asking each one of you. So first one, what is your attitude as VC to the Ton Foundation and GameFi segment in particular? Because there are a lot of games at the moment on Ton. And the second thing, as far as my origins come from the CIS countries, the second question would be, is the team packed up from the CIS still a red flag? Or given that Donald Trump is going to the Oval Office in a couple of months, it's absolute no problem. Thank you so much for that.
Thank you, sir. So I think I heard the second question, which is team backed by CIS region still considered a threat? Yeah, maybe Chris, you want to have a punt on this one?
Could you repeat the question? I just couldn't understand.
Like I think the gentleman was saying is that it's teams backed by CIS, backed by CIS forces, considered as a threat when we decide to invest into projects. Is this your question? Oh, please come on stage. We couldn't hear you. So sorry. I was like.
It's working. No, the first part of the question was, what is your attitude to Ton blockchain itself? The first question was, what is your attitude as VCs to the Ton blockchain? To Ton blockchain. That's the first part of the question. And the second part was about the team is located in the CIS region only and not global yet. Is it possible to get your attention as investors? So I would rephrase it a little bit.
Yeah, thank you. Maybe.
I mean specifically Russian teams, how American investors treat developers from Russia. Am I right? Well, I would say in this case, if we're talking about political questions, I wouldn't in this case address this question, but you can answer whether you like Ton blockchain and projects on Ton blockchain or not.
Yeah.
Yeah, so we're blockchain agnostic and ecosystem agnostic. The Ton blockchain has actually created a lot of excitement amongst VCs. So we are actively looking at projects there, especially on the DeFi side, as there's not a lot of mature first mover company that has built there and that is investable at this stage. So we're actively looking at that, regardless of where they're based.
Yeah, and thanks for just clarifying the question, because I think it's a good one and it comes up, and I would kind of echo the same sentiments. Agnostic. We go back to that same framework, right? Regardless of what we're looking at. As I said earlier, it comes down to data analysis and diligence calls. And part of the things I got to get comfortable with is the team behind it. And so, sometimes this goes for any project, sometimes it's tough to nail down who the key people are, the key developers, or the key people making executive decisions, kind of driving the ship. And so we try to find out who those actual people are, have conversations with them, and understand, again, from a fundamental standpoint, from a bottoms-up standpoint, what that protocol is building, what the end market is. But when it comes to tokenomics, that's also another consideration, right? So if there's a huge concentration of tokens owned by any one person, regardless of where they are, or a few, that can create a little bit of a red flag from just a tokenomic design standpoint.
Yeah, I would say the nationality of a founder team doesn't really matter as long as they have the global insights into how to do user acquisition regardless of the market. For example, we will look at Asian founders, Chinese founders, but as long as they know how to do the marketing internationally and connect with BD resources worldwide, then it's it doesn't matter. And then for Ton blockchain, I actually think we all invest pretty agnostically into different ecosystem. And the Ton blockchain is a pretty sexy narrative, I would say, and because the association with the biggest messaging app, which is Telegram, similar play we can see happening in Asia at the moment. There's a chain called Kaya, K-A-I-A. It's actually the merge between Clayton and Finxia. We call them the merge between kimchi and sushi, and they are associated with the messaging app called Line. Line has pretty wide user base in the Southeastern Asian countries. When I was in DevCon in Bangkok, I told others about Kaya. The people who don't understand crypto space, but there's a lot of whales. They heard about Line being associated. They immediately bought a lot of tokens, in the spot market, etc. So yeah, I think this can be your card when talking with investors as well. Although it's been ongoing for a while, so you need to just try to differentiate yourself from other builders, like why you have a unique advantage. But thank you for the questions.